Hey investors, welcome back to the Real Estate Hackers channel. I'm host Dave Hathaway. Today we are going to analyze the Dayton, Ohio real estate market. First, we're going to look at the overall Dayton, Ohio market, and then we're going to take a deep dive and analyze an actively listed investment property and look at things like cash on cash return, return on investment, rehab costs. By the end of the video, you're going to know the fundamentals of the Dayton, Ohio real estate market, how much cash flow a rental property makes in Dayton, Ohio, and if buying an investment property today is a good or bad financial decision. So let's get into it. And today we're going to look at the property 578 Wyoming Street, Dayton, Ohio, 45410. If you haven't already done so, and if you've returned and liked the content of this channel, love you, like and subscribe to the video, guys. The overall market of Dayton has a population of 134,189, and it has decreased 2.41%, which is never a good thing when population is declining. It does look like it's leveled out if you look at the graph. Unemployment in the market is 6.70%, which is higher than the national average. Salaries in Dayton average around $54,655 per year, and that's according to ZipRecruiter. Median sales price in Dayton, this is where it gets interesting, is $129,000, but it is up 12.2% year over year. Average days on market for properties being sold is 48 days, and that's up 4 days. And the median rent price for properties is $1,200, and that's actually down $225 over the past month. So it looks like there is some downward pressure on rents. The price to rent ratio is 8.95%. And if the price to rent ratio is under 15, you usually can find pretty good cash flowing rentals. So I'm excited to dig into the Dayton, Ohio market. Dayton doesn't have any Fortune 500 companies, which we like to see. It doesn't actually have any major sports teams, but it does have the Dayton Dragons, has a few minor league teams. Dayton Dragons are a minor league baseball team, I think single A. The Dayton Flyers are the sports teams for the University of Dayton and their Division I school. And it does have an international airport, which is Dayton International Airport. The overall market verdict for the Dayton market, I will give it 1 thumbs up just because it's such a low cost to entry. It has some economic stuff going on. Population has kind of steadied off. It's not massively declining, and it's been kind of on this same trajectory over the past 20 years. So overall, give it a 1 thumbs up. I don't want to give it a 2 thumbs up, as it does have some bad things like unemployment. It doesn't have any Fortune 500 companies to even out employment, but it does also have a great low cost of living, which is awesome. You can purchase properties for cheap and rents relatively low. So if you're looking to move to a place, Dayton could be the place to move to. And fun fact for today is I was born in Dayton. So that is your fun fact for today. Looking at the Google Street Test, the property that we picked out, it looks pretty good for the Google Street Test. Nothing crazy. This is single family. It does semi back up to a graveyard. It's a bunch of houses away, but it's relatively close to a graveyard. But it's also relatively close to some other cool things like Walgreens, like a Kroger. It's got a Wendy's. It's got a urgent care health clinic right there. So it's got a bunch of things within walking distance, which I always think is positive for any renters. And it's also on the other side of the cemetery is the University of Dayton, which is a big, relatively well-known university. And so it's possible to rent out to students. They might just have to mosey on over through the cemetery to get to classes. But overall, we're going to give the Google Street Test a pass. Moving on to the listing details of this property, it's listed for $120,000. It's a 3-bedroom, 1.5 bath, single family property, 1,488 square feet. It was built in the 1800s, and you don't see a lot of these properties. So it was built in 1897. When we actually look at the listing photos and talk about the rehab, the flooring on the main level, it's just jacked up. So I would replace all the flooring on the main level with LVP That means kitchen, that means living room. Just unify it all. If the flooring upstairs is okay, I'd leave it and I just let the tenants beat up on it. It looks like it's a laminate flooring. It looks like it might be in okay shape, so I just leave that. Moving on into the kitchen. Kitchen definitely is rough, and so I'd actually get rid of all the cabinets, change the layout just a little bit, put in stainless steel appliances, put in granite countertops, put in a little money here. You're going to get it on the back end of the sale. You're going to get it a quicker rented property. And I'd also renovate the bathrooms. So that means master bathroom. Not totally renovate. Looks like they have maybe a shower, stand-up shower. Can't totally see. The tile looks to be in good shape, but I'm definitely replacing the big blue vanity. You know what I'm talking about. And putting a nicer big framed mirror there. And just making that kitchen pop and that master bathroom pop. The one thing that I will note is this looks like it could be a fake full rehab property. And what I mean by that is you can see a lot of detail in the trim, but it looks like it's probably been painted over 100 times. The paint's probably pretty gunky. And so sometimes it might just be better to renovate the entire property. But for this purpose, I'd renovate what I could, the bathrooms, the kitchens, and just keep it on moving, see if I can get a bunch of years out of the property as a rental. And so my rehab budget's going to be somewhere around $25,000. If you are having issues, you're scared of the rehab, you're finding that in your investment properties, your rehabs are taking too long, they're over budget, you're dealing with crappy contractors, and you don't really have any systems to deal with that, I definitely encourage you to go over to our course, Master Rehab 101. You can find a link in the video description, or you just go masterrehab.com. You can find it there. It will gravely help you on your rehab processes to really get humming along. Moving along to the analyzer. Zillow says that the property should rent out for somewhere around $13.21. When I look at comps, I tend to get a little bit conservative because there's some nice properties running out for that price, so you really have to make this a wow factor. So I'd be conservative at $1,300 for my rent estimate. Property taxes are $2,103. So when you look at the cash flow on this property, it is $787.65 or 6.21% cash on cash return, which only means if you purchase the property all cash, that's the return that you're going to get after all of your expenses. So if you then leverage the property with a DSCR, a 30-year fixed loan, your returns go down to about $62 or 1.98%. Not very good. So this would be a property that I would pass on or try to get a better deal, maybe try to get it for $100,000. And then you have some cash flow numbers. I do think rents are going to appreciate over time. I do think this one's in a pretty good location. So you have those. And I think if you got it at the right price, this could be a good long-term rental. You just have to be careful of that fake full rehab that I chatted about a little bit earlier. So overall, I'm going to give the property a thumbs down at this price. If you can get it for $100,000, I'll probably give it a thumbs up. I give the market one thumbs up for Dayton, Ohio. I do think it's super intriguing at the price points that this could be a market that could just go skyrocket up, and you'd be super glad that you got in when you could at these prices. And so that is our analysis of the Dayton, Ohio market. We'll see you on another Deal Day episode.